Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. Shares of Canaccord Genuity are rallying today after the company posted higher than expected fourth quarter revenue. You can see it's up about 6%. The metric jumping 33% compared to the same period last year. The profit also came in above expectations. Canaccord says the results were driven by higher investment banking, while wealth management continued to scale. Shares of Transcontinental are trading lower after profit fell in its most recent quarter. It's off by more than 10%. Lower revenue and higher financial expenses also impacted the period. The Montreal-based company also anticipates lower returns in its book printing sector for the remainder of 26, but says the closing of its packaging business will allow it to focus on its growth strategy. Shares of TransAlta are seeing a decline, off by more than almost 11%. Not more than almost 11. The company is buying two gas-fired power plants in Colorado. TransAlta says the $1 billion purchase from Blackstone will strengthen its foothold in the western U.S. The deal will also immediately add to free cash flow. And taking a look at the markets right now, the TSX going against the grain from the U.S. It is up nicely right now and back well above 35,000. It's up by 0.9%. Pretty much every sector is in the green, save for utilities, and that is pretty much at a wash right now, leading the way materials. South of the border, a bit more of a mixed bag. You can see the S&P 500 now into the green. Up by much, by 0.09%, and the Nasdaq is off by a little less than a half point. Bit of a tech sell-off, although it's calmed down, and the loss is lessened throughout the morning. Well, the Trump administration is taking a new approach to global tariffs after the U.S. Supreme Court struck down previous ones earlier this year. The focus now is on curbing imports made with forced labor and a proposed new 10% tariff on Canada and other trading partners who allegedly fail to comply. CTV's Abigail Beeman has more.
Hello. Just hours after the U.S.-Canada trade minister said he had a positive meeting with Jameson Greer, Greer put Canada on the list of countries that could be hit with a new 10% tariff. The failure of our most important trading partners to address the importation of goods made with forced labor is unacceptable. This creates a dynamic where American workers are forced to compete globally on an unlevel playing field, Greer said.
This is not a surprise.
The Prime Minister pointed out the vast majority of goods fall under the Canada-U.S.-Mexico free trade deal and won't be impacted. He says Canada supports the overall objective.
We made some changes earlier this year on things that candidly were not as effective, so there's ways we can change things legislatively. We'll be proposing that to the House in the coming weeks.
It's not about forced labor. It's about finding a new reason, any reason they can, to apply a tariff on Canada and the world to harm our economies. It's just like the fentanyl tariffs.
LeBlanc wouldn't answer whether he and Greer discussed Canada's move to allow some Chinese EVs into the market.
We don't discuss publicly the content of private conversations.
This administration is willing to use any leverage it has in order to get Canada or any other country to do what it wants.
U.S.-Canada expert Christopher Sands says the U.S. is intentionally moving some trade irritants outside CUSMA, or as it's known here, the USMCA.
The good news is that might mean the USMCA could move as far as renewal, or that the negotiations could be more constructive going forward. The bad news is this is designed to keep the U.S. with leverage, even if we renew USMCA, because we have the other issues that we could use to impose tariffs on Canada.
Now, these tariffs aren't in place just yet. Experts say important to point out there is a process. The USTR will hold hearings about them July 7th. Abigail Beeman, CTV News, Washington.
And we'll have more on morning markets after the break. TransAlta is expanding its U.S. footprint with a $1 billion acquisition of 2 natural gas facilities in Colorado. Here to expand on this and Canada's energy landscape is Jerome Haas, portfolio manager at Lightwater Partners. Jerome, thanks as always for joining us.
Thanks for having me.
Okay, the deal. TransAlta has been busy. People are not liking it right now on the at the TSX, but your thoughts on it? Is it a good move?
Well, I mean, it's a very harsh reaction in the market today. When I came over, it was down about 11% this morning. So the market clearly is unimpressed by it, but perhaps it's a little unfair, the knee-jerk reaction. It was announced that they're buying these 2 plants in Colorado for $1 billion US. And it was also announced in the press release that their EBITDA associated with those are about 80 million. So it puts it on a 12.5 times EV to EBITDA multiple. Now, TransAlta is trading around 10 times right now on analyst numbers. And so it's perceived to be a dilutive transaction. And I think that's one of the reasons why that it's trading down so harshly today. And in comparison, one of its peers, Capital Power, has done some U.S. transactions where they've been paying 6 to 8 times. And so I think the market is a little surprised that they're paying such a higher valuation. But in fairness to TransAlta, these are brand new assets that one of them is not even completed yet. They've got a 27-year take-or-pay, which is very long for natural gas, and these are high-quality assets. So, they can justify perhaps, or that's what management would justify paying a premium for them.
And Canyon Peak is expected to come on by the end of September. Any concerns, or is that moving along nicely?
With that power plant? I actually don't know the specifics of that one. Hopefully, it's not being built in Canada, so there's a chance that it could be on time and on budget.
Okay. Not the answer I expected, but okay. So overall, you feel that this is a good acquisition then?
Well, I understand why the market's not impressed that they paid a premium for it, but it is a good asset and they don't come cheap. So it could actually improve their credit rating if the credit rating people feel that this is a high quality long-term asset. The other is that management was under some pressure to deploy capital, and so this is one way to do so. The other is it helps to dilute their exposure to the Alberta merchant market, which has been a very volatile market and has had a lot of headwinds in the last 2 or 3 years. So, I could see how the board and management could justify it in that perspective.
All right, and what does this tell you about Canada's energy industry? Can we take this as a signal of any type?
Well, it's nice to see some ambition on the part of Canada. I mean, I think, we want our companies to grow, and at least TransAlta is showing some ambition in that regard. It's also nice to know that it's not a renewable, and they actually, and I think they had an investor day in 2023 where they announced a very expansive, I think it was a $3 billion renewable energy program, and the market did not react well to that either. So this is, gas-fired power plants. This is their bread and butter, and they're good at, that type of asset. So, it should be viewed positively to some extent in that sense.
And are there more M&A acquisitions or opportunities, do you feel?
Oh, yeah. I mean, this came out of, I'm sure there's lots of private entities in the U.S. that potentially, Capital Power or TransAlta could be involved with. And there's also a lot of enthusiasm in the market for data centers. Like if you look back 2 years ago, TransAlta's share price was like $9.50. And it's really only in the last 2 years when market enthusiasm for data centers has taken both TransAlta and Capital Power up to literally double the levels they were 2 years ago.
All right, and with that enthusiasm and with what's unfolding in Iran, does this make Canada's energy industry, that appeal, is it growing, or do you see this kind of peaking and then when things normalize a little more in the Middle East, it'll drop off?
Well, I view it as an opportunity. I mean, the opportunity's been there for the last decade. It's just that Canada hasn't taken advantage of it. But there's now more of a political will within Canada to act on some of these policies, and that's really the big difference. With the issues that security in the Straits of Hormuz, that's not going to go away anytime soon, even if a permanent ceasefire is signed. And people are looking not so much for supply, but the security of supply. And Canada can solve that problem, especially for Asia, which has been heavily dependent on the Middle East for its oil and its natural gas.
And you think we can seize the opportunity?
Well,
do we have what it takes?
You know what? I'll leave that to the electorate to decide, but I sure hope that the federal government proves me wrong in that. I'm very skeptical about their ability to do so. But that being said, you don't even need them to deliver on half of what they promise, because it is a very exciting time in the Canadian oil and gas space. And if the federal government helps out in some ways, that would be a marked change for what we've had in the last 10 years.
And so I guess that would be one of the weaknesses for the market, I guess, for the energy market here in Canada. What are some of the strengths? Obviously, the appeal, the stability.
Yeah, I mean, the other is just that oil prices. Like, it was an attractive sector when we were using $65 WTI as a base case for 2026. We talked to some analysts this week, and it's hard to see oil getting down below 75, 80 in the second half of this year. So that's a boon to everybody in the Canadian oil patch. And, it's good times right now. It's a good place to be.
All right, let's get to a couple of investment ideas you're liking right now. Gibson Energy.
Yeah, Gibson Energy can be thought of as a toll road for crude oil in Canada. They have a lot of facilities that literally touch oil in many aspects. They've got storage, they've got pipelines, they've got blending facilities, and they've got export facilities as well. And so I think 1 in every 4 barrels of oil in Western Canada goes through a Gibson facility, which is a pretty remarkable statistic. And what's nice is that 75% of their revenues are take or pay, and so it's like a fixed price contract, and so it's not sensitive to the oil price. Because investors in the oil space have to be a little careful, is that once this permanent ceasefire is announced, the whole sector is going to drop 15%. Oil prices will come down to $80, so it will be very substantial. But names like Gibson are not that sensitive to it because they have such a large percentage of their revenues are take or pay. So it gives you some downside protection. The other is it's pretty nice having a 6% dividend yield, and it trades at a discount to the sector. It's about 10.5 times EV to EBITDA, which is a discount to its peers, which are probably closer to 11.5.
All right, and the other one you like is Rockpoint Gas Storage.
Yeah, another Canadian energy infrastructure name. We're not big fans of echo pricing in Western Canada, which is basically the benchmark for gas there. The advantage of Rockpoint is that they're not as sensitive to that. In fact, they take advantage of that. They're the largest natural gas storage, independent natural gas storage producer in North America. So they've got 6 facilities split between California and Alberta, and they'll be a big beneficiary of the increasing demand for natural gas in the short to medium term. But on top of that, as Canada has more use of LNG, you need storage when you have LNG facilities. And so we think there'll be increasing demand for that. And also the rates for that will go much, much higher. We've seen in California when they introduced LNG to the state that natural gas storage rates tripled as a result of that. And so we think there is a lot of upside to Rockpoint that's not being captured yet.
Okay, we have to wrap it up there, Jerome, but thanks as always for joining us.
Thanks for having me.
Jerome Haas is portfolio manager at Lightwater Partners. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including a bullish call for Athabasca Oil. Let's take a look at some of the notable analyst calls and recommendations today. Athabasca Oil has been rated a new buy at Jefferies with a price target of $14, viewing the company's commitment to returning 100% of its thermal oil free cash flow as a major tailwind for share price. This bullish outlook is driven by aggressive share buybacks, reducing the share count, improved heavy oil margins from the TMX pipeline expansion, and funded production growth. All right, the federal government is unveiling its AI strategy that outlines a vision focused on job creation sovereignty and increased AI adoption. AI Minister Evan Solomon speaking right now, and we're expecting the Prime Minister to speak shortly as well.
More fitting place to launch a national strategy called AI for All than right here at the great Toronto General Hospital at the University Health Network, one of the great innovation health centers in the world. And Dr. Smith, Kevin, thank you for you and your team for hosting us today. Some remarkable demonstrations that I would encourage everyone to see. We are also in the riding of our great colleague, Dr. Danielle Martin, who knows a lot about health and innovation here at UHN. For decades, UHN has been one of the places where Canadian science and Canadian medicine and innovation have come together to improve people's lives at their most vulnerable moments. And UHN now has an AI hub actively moving to safely and responsibly integrate AI innovation into their hospitals to serve patients and Canadians and support clinicians. That's exactly what our national strategy AI for All is all about. AI that serves Canadians, not the other way around. L'innovation au service des gens, des patients, l'innovation au service du Canada. So I just want to quickly recognize members of Canada's AI Strategy Task Force who are here today. Many of you helped shape this strategy through your expertise, your advice, and your commitment to making sure Canada's approach to AI is ambitious, responsible, and grounded in the needs of serving Canadians. Merci pour votre contribution importante. Now, this is a transformative moment, as the Prime Minister says, and we all hear about AI everywhere, at the dinner table, at work, and there's an enormous opportunity to change lives for the better. But we know there's real concerns about trust and safety and privacy and control. And we have to be open to the opportunities for AI in Canada about these concerns. And our strategy for AI for All, is a pragmatic, practical one that will make sure Canadians have the skills, the tools, and the means to ensure that AI serves our values just like they're doing here at UHN. People need to see what AI does for them, not what AI is, how it's supporting doctors and nurses and improving services. The goal of the strategy is to do just that, as the Prime Minister will tell you about, to build trust and create opportunity and to give us a greater sense of sovereign control. The Prime Minister has been clear from the very beginning. This major transformation must be seized, and Canada's approach must be built on Canadian values, built on Canadian strength, and built to serve all Canadians. So, to give the details, it is an absolute honour and pleasure to welcome the Right Honourable Mark Carney, Prime Minister of Canada.
Thank you. Thank you all. Thank you very much, Minister Solomon, chers collègues. It is a great pleasure to be here at Toronto General in the University Health Network. It is humbling and inspiring at the same time to be here and to be with such an esteemed group. Dr. Smith, I should acknowledge as well, Dean Connor, Chair of the Board, Dr. Smith, Kevin, and the entire University Health Network team, thank you for your service and the care that you provide to so many Canadians every day. Let's put this in context. And for those of us who had the privilege of going around the exhibits, it's not just the service, but it's the innovation. Everything that I saw didn't exist 5 years ago, but is transformative today and going forward. And think about it, Toronto General, this broader network, 700,000 people are treated a year using a precious combination of empathy, compassion, and world-class expertise and cutting-edge technologies. All of those aspects are present. The world's first single and double lung transplant happened here. The first external heart pacemaker, the first use of insulin, all happened right here. That's what's possible when good people harness new technologies and deploy them with the right purpose. And that's what we must do today on a much broader scale, but at the same human level. Because artificial intelligence, the defining technology of our era, is here. In his recent encyclical, Pope Leo warned that the scale and speed at which AI is developing, and I quote, "Never has humanity had such power over itself," and he set the challenge of whether we would use that power for the common good. The question isn't whether AI will transform our lives, it will. AI is already changing how we work, how we learn, and how we connect. The question is, will it improve the lives of all Canadians or benefit only a few? And that's why we must take a positive, pragmatic, and prudent approach that builds safe, reliable, and sovereign AI for workers and businesses, for Canada, and for our allies. Les Canadiens ont contribué à inventer l'IA moderne. Les idées fondamentales qui constituent les systèmes d'aujourd'hui passent par les chercheurs canadiens Jeffrey Hinton, Joshua Bengio, and Richard Sutton. Cet héritage se poursuit grâce à des universités de calibre mondial, à 3 instituts nationaux d'IA, Mila à Montréal, AMI à Edmonton et le Vector Institute à quelques pâtés de maison ici, ainsi qu'à plus de 3,500 entreprises d'IA partout au pays. Au Canada, nous comptons 150 000 emplois directement liés à l'IA et plus de 800 000 emplois dans le secteur plus large des technologies numériques. C'est le secteur qui connaît la croissance la plus rapide au Canada. Au cours de la dernière décennie seulement, l'IA a contribué à hauteur de 140 milliards de dollars à l'économie canadienne.
$104 billion to the Canadian economy.
Canada has many of the attributes to help lead it. We're an energy superpower. We're committed to doubling our electricity grid, building on the lowest cost power in the G7 and the second lowest emission power in the broader OECD. We have the most educated population in the world, including experts with deep expertise in AI, robotics, and quantum. We're a pluralistic society that works. We're a stable, reliable partner in a world that is anything but. But first, we have to be honest about the risks that AI poses to Canadians and the challenges that Canada faces. Deep fakes, unsafe chatbots, AI-generated disinformation are becoming more prevalent. The privacy of Canadians is under threat. Globally, Canada ranks near the bottom of countries in AI training, in literacy, and trust. Only 12% of Canadian businesses are using AI today. Among small and medium-sized businesses, adoption is even lower. And we are highly dependent on foreign suppliers for the infrastructure that powers AI, from compute to cloud to data storage. That creates real risks that foreign entities could access Canadian data, deploy AI products that shape Canadian lives without reflecting our values, and tilt the playing field against Canadian firms, while Canada lacks the leverage to push back or the ability to control. It also creates the risk that, as with other forms of integration, from financial payments to supply chains, AI could be weaponized against us. Pour faire en sorte que l'IA profite à
We have
chaque
to make sure
Canadien,
that AI,
nous avons besoin d'une approche qui rejoint
we need
chaque Canadien. Nous
an
avons
approach
besoin
for
d'une stratégie
each single Canadian.
qui aide nos travailleurs et nos entreprises à
We need
adopter
something
l'IA,
that helps
à soutenir
our
la concurrence à
employers
l'échelle
and
mondiale.
employees.
Une stratégie qui garantit aux Canadiens de
A
choix
strategy that guarantees
dans
Canadians
les outils d'IA qu'ils utilisent
in
et
the
une stratégie
AI
qui
tools
repose sur des bases de confiance et de
and the
sécurité.
strategy that
We need
relies
a
on
strategy that not
trust.
only addresses these challenges, but also builds on ways in which Canadian businesses are using AI. I'll give some examples. In Halifax, Dr. Robert Chen and his team at Cardio Diagnostique are using AI to screen heart murmurs in infants, leading to lower unnecessary referrals and shorter wait times. In Saskatoon, the Canadian company Croptomistic is using AI to transform soil mapping so there's less fertilizer that's used. In Peterborough, AI-powered traffic lights are reducing congestion, 40% fewer vehicle delays, 20% fewer emissions. Prosperity and sovereignty in the age of AI belong to those nations that can build, adopt, and govern AI on their own terms. Nations that encourage the deployment of AI to make the lives of their citizens better. And to that end, with Minister Solomon and colleagues, we're pleased to launch Canada's new AI for All strategy. That's AI governed by Canadian values, AI that is accountable to Canadians, AI that serves all Canadians. Our strategy has three guiding principles. And the first is trust. We will protect your data, your privacy, and your children. Second, opportunity. We will empower Canadian workers, Canadian businesses, Canadian students with the tools to expand their knowledge, their expertise, and their futures. And finally, sovereignty. We will reinforce Canadian sovereignty so Canadians can make their own choices on how AI is built, governed, and used. Dans le monde virtuel, comme dans
In
le
the
monde
digital
physique,
network
nous serons
world,
maîtres chez nous.
we will be master in our home.
Pour tous vise à générer 200
AI
milliards
for our
d'heures
strategy
supplémentaires de croissance économique.
will generate
Cela pourrait
good
se
for all
traduire
Canadians.
par la création de 250 000 emplois liés à
With the creation of
pour les 5 prochaines
250,000
années
jobs
et faire passer
in
le taux
AI
d'adoption
sector.
de l'IA qui est aujourd'hui d'1 sur 10 à près de 2 tiers d'ici 2034.
which will represent
Autour de cette stratégie,
two-thirds of the economy. This is
pour que les
2040.
Canadiens bénéficient de
For
l'IA,
Canadians
chacun doit
take
avoir la
advantage of
possibilité
AI,
d'apprendre à l'utiliser.
they have
Et
to learn how
pour
to use
utiliser
it.
l'IA, les Canadiens doivent pouvoir lui
Canadian
faire confiance.
Must,
Avoir
first of all,
confiance
trust
que
AI
nos enfants seront protégés, que nos
to make sure that our children
seront
will be protected
respectés, que notre culture
and
et nos
respected
langues seront non
in our
seulement préservées,
structures, in our
mais
languages,
renforcées, et que notre démocratie sera
and our
préservée
democracy
elle-même.
will be preserved.
Canadians need to be able to develop the trust that AI will be governed in ways that reflect our values, to trust that they will share in its benefits. And for AI to benefit Canadians, it needs to create new opportunities for us and to be anchored in infrastructure that Canadians can control. Under our strategy, the government will introduce new legislation, regulations and standards to protect your data, your privacy, your children. We will modernize Canada's privacy laws and online safety legislation, ensuring that they are fit for an AI-driven world. We will expand Canada's AI Safety Institute with advanced research to evaluate AI models and to track emerging risks. We'll table consumer privacy legislation that ensures AI systems safeguard children's information from exploitation and harm and we will make the development of cloud safety standards, child safety standards, a priority at next month's G7 summit in Evian, this month's G7 summit in Evian. We will also enshrine Canadians' fundamental right to privacy, including by creating protections against harmful practices such as deep fakes and surveillance pricing, so that technology doesn't outpace our ability to safeguard against technology ourselves. Second thing we will do, most exciting, and we see examples in this great research network, we will empower all Canadians with new opportunities to participate in and benefit from AI. So we're launching a national AI literacy initiative, offering training to all Canadians across the country in classrooms, workplaces, libraries, community centres. With free and trustworthy AI learning kits, including courses and modules, Canadians will better understand AI, be able to use it safely and confidently, and put it to work in their own lives. The approach will also help identify biases and misinformation and give Canadians the AI tools to learn and to help with their careers. As we adopt AI more broadly, there will be significant demands for Canadian workers who have the knowledge and the know-how to use this technology effectively. So a farmer who needs a manager with AI expertise to oversee exactly how much to plant, to water, to fertilize. The factory owner who needs an AI specialist to streamline machine data so the floor runs smoother and faster. To ensure that Canada is ready to meet that demand and to train up the next generation, we'll create over 90,000 AI-related job opportunities for young Canadians, including through the Student Work Placement Program, Canada's Summer Jobs, MyTax, and Skills for Success programs. We'll invest in training and upskilling for workers at every stage of their careers, from students to mid-career professionals to frontline workers. And we will ensure that every post-secondary student has access to trusted AI agents, whether they're in art schools or computer science labs, whether they're training to be electricians or carpenters, in order that our next generation has world-class, reliable tools on which to build and learn. We're going to use the Business Development Bank's LIFT program to help Canadian SMEs access financing to adopt AI tools in their operations. We're providing $500 million through the Regional AI Initiative to expand AI adoption, commercialization, and readiness across the country. And we'll expand affordable sovereign compute for Canadian small and medium-sized enterprises with an additional $700 million in the Compute Access Fund. So Canadian AI adoption will be prudent, pragmatic, and pro-worker. Il est essentiel que l'IA reflète l'identité, les valeurs et la culture canadienne.
The values and the culture of Canadians, which means also to reinforce the presence of French, to make sure that the tools used reflect our values. And we need AI also managed by the natives to allow them to make sure that they have the control on how AI would be developed.
Canada controls its AI sovereignty. Just in our defense industrial strategy, we will follow a build, partner, buy framework. So first, we will build in Canada and direct procurements for sovereign capabilities towards Canadian firms first. Where we can't build, we'll partner with like-minded allies to attract investment and to integrate supply chains. And only after exhausting these options will we buy from abroad. So starting with focusing on building in Canada, it's observed that Canada is one of only 4 countries in the world with a large language model. That means, amongst other things, that the data that Canadians share through their businesses and public services can be processed and governed within Canada under Canadian laws and standards. It safeguards our digital sovereignty and our national security. And with this foundation, Canada will build a world-leading public AI supercomputer, giving researchers and businesses access to secure, high-performance compute power for their greatest innovations. We'll also create a Canadian Tech Growth Fund, a $500 million vehicle to take equity stakes in high-potential AI firms, helping Canadian companies to succeed globally while remaining proudly Canadian. We will expand sovereign compute and cloud infrastructure, reducing our reliance on foreign providers. Now, today, let's be clear, most of our data that's used in AI goes across our border or is governed by privacy regimes of other countries. And that's why, one of the reasons why we will back Canadian AI talent with nearly $350 million to expand our AI institutes in Montreal, here in Toronto, and Edmonton, to increase AI research, and to recruit the best talent from engineering and mathematics to health and agriculture. Now, as in the physical world, it's not just what we build, it's how we build. We'll build sustainably, linking new data center development with expanding clean energy and robust environmental standards. We'll build inclusively, in full partnership with Indigenous peoples. As I said, we'll support Indigenous-led AI research, leveraging programs from Canadian Heritage, the National Research Council, and industry partners like Mila. And we will build in solidarity with Canadian workers, unions, and post-secondary institutions. Where we can't build alone here in Canada, we'll partner with like-minded allies. In 1 year, Canada has secured 20 economic and security partnerships, 12 of which are in AI. One of those landmark initiatives is the Sovereign Technology Alliance, which will deepen our collaboration with trusted allies, starting with Germany, in order to share AI research, talent, investment, and infrastructure. We'll use our complementary strengths to build a dense web of partnerships from Europe, Asia, Australia, and the Middle East. Ce n'est qu'après avoir épuisé ces options que nous envisageons.
It's only after use all these options that we use foreign companies. We have to make sure that these people come back to Canada to take advantage on the strategy of buying Canadian products.
The most crucial objective of our strategy is to ensure that AI works for Canadians. And that's why we're launching an AI missions program, which will take Canadian AI out of the lab and put it to work on real problems such as those we've just seen solved here at UHN. We will bring together companies, health systems, governments, community partners to move ambitious ideas into practical use faster. And our first mission, which is why we're here, is to deploy $200 million to improve healthcare with projects driven by the healthcare sector, but they could include reducing ER wait times, expanding access to primary care, reducing administrative burdens on physicians, caregivers, improving surgical methods. You know, nearly 3/4 of EU countries are already using AI-assisted diagnostics to support medical imaging and to detect disease. Et nous mettons en profit une technologie transformatrice pour améliorer.
We use this transformative technology to transform life.
Nous élargissons Vital, une plateforme canadienne de données de santé qui utilise l'IA
to make sure that AI is used in the world, in the health sector, in, for example, in imaging technology and medical files, to make sure that we use that to treat. We'll have also similar projects in other sectors.
So let me close by recognizing, as Minister Solomon did, that too often AI is talked about, including by those who are developing it and building the infrastructure to support it, as if AI were the end in itself. Too seldom is it connected to people and for people. Our strategy, inspired by UHN, our strategy AI for All, is designed to put Canadians back in control, to build trust, to seize opportunities, and above all, to harness AI to improve lives and indeed to save them. Operating rooms just down the hall, surgeons are using AI-assisted imaging to identify arterial structures during complex procedures, gallbladders, arterial structures, lungs, beyond. You know, in one of the world's most demanding jobs, with the most highly trained, skilled specialists, AI is making them even better, even more precise, even more confident, all because of a tool that did not exist 5 years ago. With our new strategy, that's how we will help shape how we use AI, to ensure that in Canada, AI works for all Canadians all of the time. To build a Canada that's not just strong, not just intelligent, but good. And with that, I look forward to your questions. Thank you very much.
You've been listening to Prime Minister Mark Carney talking about their new AI plan. It would create 90,000 AI-related jobs, help create another 250,000 new jobs through AI adoption by 2031. Both of these are by 2031. Boost AI among businesses from 12%, which is one of the worst around, to 60% by 2034, and create a world-leading supercomputer to boost sovereign infrastructure by 2031. Let's bring in Rosalie Wanch, the Associate Director of Research at the C.D. Howe Institute, to talk a little bit more about this. Rosalie, thank you very much for joining us. I'm sure you were listening. Your thoughts on what the Prime Minister had to say. Where does this leave the country?
Well, I think that it's good to get some clarity on what the government's AI strategy is shaping up to be. Obviously, this is a fast-moving technology, and the regulatory and government process tends to be a bit slow, so it's really good to get an update. And overall, I would say that the strategy, various points of the strategy really are in the right place. The concerns around data sovereignty, looking at improving AI literacy, addressing gaps in financing for small and medium-sized businesses that that are either in AI or would like to adopt AI. So I think there's a lot of positive things in this announcement, but as always, the devil will be in the details when we actually see the shape that these policies will take. But overall, I think it's a very good move.
What's your big concern with the devil in the details? That it might get bogged down, not brought to fruition?
Not that it would get bogged down, but maybe that it still might just be a little bit slow. I mean, the major concern that a lot of Canadians have around privacy is something the government has repetitively said is very much a priority, particularly when it comes to youth. And they're working on legislation, but we actually have yet to see what that legislation is. And the longer we go without really significant clarity on the rules, the higher the chances that things could go in a direction you don't want, but also it holds back businesses from investing simply because they might be worried about what regulatory barriers they will face in the future. So the sooner you can clarify exactly where things are going to be, the more you can get certainty for the business community, and they can start acting on things they might be wanting to do.
Why is it with businesses, 12% of businesses are using AI? We lag behind pretty much everyone else. Why is that? Is it Canadians, that natural hesitancy to embrace new?
I think it's a combination of things. Normally, like in past areas of technological change, we do see that adoption does take quite some time. And initially, even high adoption doesn't necessarily lead to immediate productivity gains because it takes time for businesses to learn about the technology, experiment with it, and really figure out how to integrate it into their businesses in a productive way. And though Canada might be lagging behind on some things. We are still a world leader on AI, but we have been falling in the international rankings over time. So it's hard to say exactly why, but I can say for sure that as recently as about 6 months ago, the majority of businesses did not think that AI was even relevant to their business. But we actually got new data as of about 5 days ago that shows that has declined from about 2/3 down to about 40%. So really, I think it was a lack of familiarity and literacy was probably the main factor holding people back. But we see pretty significant signs that businesses are thinking it is relevant and are interested in moving forward.
And I think if you do another survey at the end of the year, you'll see that number dropping even further. So is 60% a boost to 60% businesses using AI by 2034? Does that seem reasonable?
I would say that given the limited data we have from 2024 until now, that's perfectly on trend. And actually, I would say it's an underestimate. The government could be potentially much more ambitious, because if adoption continues on the more or less linear trend that it has for the last 2 years, we would actually reach that level before 2034. And so AI adoption has been growing at about 6.5% of businesses per year. And actually, the most recent data release puts us at 19%. The number that's quoted as 12 is actually from second quarter of 2025. And so that's the other issue there, where sometimes our data might lag by 6 months, and this is so fast moving that the picture changes with every release.
Maybe we should be using AI to help generate some of this stuff. The big thing, of course, with AI, job loss, fears of job loss that aren't being replaced. Government's looking to create 250,000 jobs through AI. Does that seem realistic?
I can't say, I haven't done the math, so I can't say about the actual number on the jobs. But what I can say is that the fear of mass job losses accompanies every major new general purpose technology and goes far back in history. However, what is important for people to know is that mostly isn't people actually losing their jobs. It's jobs that don't get created in areas that can be automated, but also new jobs related to the new technology do get created. So while there is disruption in the labor market, the overall aggregate in terms of job losses is likely to be pretty low. And if anything, the potential for growth is likely to outpace job losses as the opposite. But it's really about, we don't know what the new jobs might be, and the industries or jobs that are affected those employees might not easily be able to transition into the new jobs that are created. So training or monitoring that situation is of the utmost importance so that we can moderate the downsides of this disruption.
And there are going to be some downsides for sure. Safety and security was the one mentioned. You also said that government's kind of playing catch up with this. Can they catch up when it comes to that, safety and security? Or governments traditionally always kind of playing catch up when it comes to new technology?
Well, I think that governments are traditionally playing catch up with new technology, but that's also partly the way that it has to be. I think there is some risk simply because Canada's privacy and data legislation hasn't been updated for quite so long. So maybe if we were updating on a more ongoing basis, there wouldn't be sort of as much delay or as much current risk. But I think that security and safety is of the utmost importance, and we do need to make adaptations not only for the form of the technologies today, but based on principles for what we'd like to prevent, because we don't actually know what AI will be capable of even 2 or 3 years from now, let alone 10 years from now. And so we need to write the regulations so that they're effective in the longer term, but also a living document that can adapt to changes as they happen or handle new risks as they arise.
Okay, we have to wrap it up there, but Rosalie, always appreciate you joining us. Thank you.
Thanks so much.
Rosalie Wanch is Associate Director of Research at the C.D. Howe Institute. Up next, we'll take a check on the markets. All right, let's take a look at how the markets are doing. We'll start with Bay Street right now, and it's had a nice day so far. It is up more than a point, almost 1.1, and tech and materials, financials, all leading the way. Communications, utilities slightly dragging it down, but otherwise it is up. There's a couple of companies of note that we want to talk about. We'll bring up Descartes first. And where is it sitting at right now? It's up about 9% as its Q1 beat. Has a lot of people happy about this. Its biggest intraday jump. And going the other way, though, TransAlta announcing the purchase of $1 billion worth of Colorado gas assets, and it is taking a hit. It's off by about 10%. And a quick look south of the border. The day started off rough, but things have slowly turned around. You can see the S&P 500 up by 0.17, and the NASDAQ has kind of clawed its way back. Still down, but it is improving. Market Call is coming up next. I'm Roger Peterson. Thanks for watching Morning Markets. We'll see you back here tomorrow.